This is a picture showing molten metal being tapped from one of the furnaces at Zone Ende. This year we completed the rebuild of number 1 furnace, ensuring capacity in line with our growth profile. Number 1 was built back as a 20 megawatt unit with the potential to move to 30 megawatts with a voltage change. This picture shows an important component of Booysendal South. It's the concentrator with the associated tailings dam. And the tailings dam is the old Aquarius tailings dam. It's currently being reconfigured for the life of mine at Booysendal South. At the central UG2 mine, the capital footprint of the BS1 and BS2 modules has been reached, and we now have 14 stoping sections in place. Head grade remains around 2.8 grams per ton, and production of ore is currently around 180,000 tons per month. Eland is in the early stages of development and is progressing satisfactorily. We produced 33,000 ounces in concentrate, together with a further 34,000 ounces procured from third parties, the cost of which is linked to commodity prices, and hence the unit cash cost increase to just below 55,000 rand per platinum ounce.
This is a picture of the Buttonshope Conservancy Trust. During the past year, we acquired additional farms to take our land under management to just over 8,500 hectares. Northam established this trust in 2011, together with the Mpumalanga Tourism and Parks Authority, as a first of its kind cooperative approach to land conservation. We employ a dedicated land management team and have specifically targeted the catchment and headwaters of the Dwarsrivier to best conserve this environmentally rich area. As you can see, the trust contains breathtaking natural beauty. Looking at the key financial features for the year under review, this has been a significant year for Northam. Key features include, firstly, the accelerated maturity of the Zambezi BE transaction through the implementation of the composite transaction, which led to the establishment of Northam Holdings as the new listed entity. Secondly, the acquisition of a significant shareholding in RB Plat, which aligns with our long-term growth, sustainability, and operational diversification strategy. This introduced Royal Bafokeng Holdings as a significant shareholder in Northam, further strengthening our empowerment credentials. Despite the operational challenges that Paul has mentioned, as well as the increase in general mining inflation and a lower basket price achieved, sales revenue increased by 4.4% to 34.1 billion rands. This translated to an operating profit of 14.9 billion rands and EBITDA of 16.5 billion. Net debt increased to 16 billion, essentially on the back of the significant cash outflows in respect of the Zambezi BE transaction, our investment in RB Plat, and the capital expenditure incurred in line with our growth profile.
A key tenet underpinning Northam's growth is our bottom-up analysis of global PGM mining potential. This is illustrated in the following 3 graphs, forecasting primary supply for platinum, palladium, and rhodium out to 2040. For platinum, we see a continued contraction in supply over the next 2 decades. For palladium, we forecast essentially flat out to 2027 when the southern cluster begins to contribute. However, we do caution that this profile is at risk due to constrained capital flows into Russia and the current restrictions from Western markets on Russian metal sales. And for rhodium, we forecast a similar declining profile to that of platinum. This is a bottom-up analysis constructed on a shaft-by-shaft, half-level by half-level basis, from resources through to reserves, through to final metal production, and includes all announced projects.